we believe that when everything's said and done in this 5-wave cycle, meaning 1 through 5, the impulse wave, that we could breach just slightly $34 per ounce. And why that might not sound exciting when you consider silver's been to 50, we haven't seen silver really breach in much past $30. We've seen it a little bit, but not for a sustained level. And according to what we're looking at in terms of my technical studies,
Right.
we've still got a pretty strong move ahead of us. We're at about, $30.25. I'm looking at $34. And that's a pretty sizable move when you look at silver, especially if
Right.
you're a futures trader, if you are what your guys are, silver stackers.
In the volatile precious metals market, silver is attracting considerable attention. Gary Wagner, a prominent analyst specializing in precious metals and Elliott Wave Theory, believes that while a full price projection can't be completed until Wave 3 concludes, the 5-wave cycle could push silver prices above $34 per ounce. This forecast is significant given silver's difficulty consistently exceeding $30. The analyst's projections align with broader market trends, as silver has already demonstrated its capacity to approach the 2024 price target of $34.70. While reaching the $50 level this year appears unlikely, Wagner suggests a high probability of silver hitting $37.70 in 2024. This upward trajectory supports the overall bullish silver price forecast despite some adjustments to the timeline. Interestingly, the initial bullish target of $34.70 was nearly achieved, prompting a revision of more ambitious projections. Based on current chart formations and market dynamics, the next target range of $48 to $50, previously anticipated for 2024, has been pushed back to mid-2025. Wagner's technical studies emphasize silver's substantial upward potential, presenting what he views as a significant opportunity for traders and physical silver investors. This perspective becomes particularly relevant in light of silver's recent price volatility. The market has witnessed dramatic swings, with silver experiencing a sharp 10% decline from December 2023 through February 2024, followed by an impressive 34% rally from March to May 2024. However, this bullish run was tempered by a subsequent 5.22% drop over the next 3 months, underscoring the market's ongoing uncertainty and potential for rapid shifts. Adding another layer to this complex market outlook, analyst firm Metals Focus projects a substantial silver deficit of 215.3 million ounces for 2024, potentially the second largest shortfall in over 2 decades. Before we begin, please subscribe, hit the bell icon for updates, and share this video with anyone who might find it helpful.
This is a daily standard candlestick chart of gold. We're looking at a daily candlestick chart of silver futures. It's a continuous contract. It represents the most active December contract. I've got 2 primary technical studies, our Elliott Wave count, as well as a Fibonacci extension, which is how we forecast where we think a current wave or rally or correction will go. We use a retracement for a correction. And as you can see on this daily chart, the large candle to your right represents today's, at the time of this recording's, $4 move. I think about $1.21.
Right.
And it comes right up to what's a 0.618% extension. In other words, the way our count goes, we look at the move from $27 up to where it says 1 as a wave 1. Our wave 2 correction is where we started recently this rally at 28. And we're forecasting that this leg of the cycle, meaning our primary third wave, will take us up to about 31.73. That's where you've got the number 1. It then shows a correction. We're just penciling in. We don't have the exact numbers yet. We won't be able to really do a hardcore calculation of a corrective wave 4 until wave 3 is completed. But we believe that when everything's said and done in this 5-wave cycle, meaning 1 through 5, the impulse wave, that we could breach just slightly $34 per ounce. And why that might not sound exciting when you consider silver's been to 50, we haven't seen silver really breach in much past $30. We've seen it a little bit, but not for a sustained level. And according to what we're looking at in terms of my technical studies, we've still got a pretty strong move ahead of us. I'm looking at $34. And that's a pretty sizable move when you look at silver, especially if
Right.
you're a futures trader, if you are what your guys are, silver stackers. And so it really pleases me to say that our technical studies, and they can be as wrong as anything,
Right.
but our technical studies are anticipating breaking $34. And that to me is exciting because we need to break above the recent tops if we're actually going to go into new uncharted territory. Unlike gold, that we've seen that occur so many times this year, and specifically today, we saw a major move over $40,
Mm-hmm.
taking it to a new record high and the highest closing value on record. And I haven't been able to come on with a straight face and tell our silver enthusiasts how excited I am about silver right now. And today I can.
Wagner's analysis suggests that decreasing interest rates could catalyze significant growth in these metals, potentially propelling silver back to price levels not seen since the dramatic peaks of mid-2011. Wagner's optimism is rooted in current market dynamics, where gold is already flirting with all-time highs. This strength in the gold market, coupled with anticipated economic shifts, paints a promising picture for silver. Historically, silver has demonstrated its capacity for explosive price movements. The most notable of these occurred in 1980 when silver briefly touched an all-time high of $49.45 per ounce. This spike was largely attributed to the infamous attempt by the Hunt brothers to corner the silver market, a move that sent shockwaves through the commodities world. More recently, 2011, silver approached the $50 mark again, reaching a peak of $49.82 per ounce. This surge was driven by a perfect storm of global economic uncertainties in the wake of the 2008 financial crisis and a subsequent flight to safe haven assets. Let's get back to the video.
The gold and silver have a negative correlation between interest rates because if you can get a guaranteed return in a fixed income treasury of 5%, and you're looking at the potential of a metal to move up 4 or 6% or 8% with risks, you're going to go for the fixed income. If you're like myself, and I believe many of your viewers, and I know you, that doesn't really regard fiat currencies as the most stable way to hold your equity, and that's why we purchase physical metals, be it gold and silver. I think that as interest rates come down, and so if the Federal Reserve cuts it by either a quarter or a 0.5%, that's the if card right now for next week's FOMC meeting.
Right.
It's not the single interest rate. It's not the single interest rate that I'm so interested in. It's the fact that it signals the Fed pivoting to interest rate normalization, which means that over the next year or so, or let's say by the end of 2025, we will have interest rates back down to around 3%, maybe 3.25%.
Yeah.
They're sitting at 5%. That makes, when you compare returns on fixed income such as treasuries, whether it's a 2-year, 10-year, or 30-year bond, to the upside potential for precious metals like gold or silver, the fact that there is tremendous upside potential in those metals, and we know that as interest rates come down, that will boost the allure to invest in gold or silver. The fact that central banks have been buying gold, and that does spill over into silver, and the fact that there's been such a tremendous demand on a retail level for precious metals tells me that we could move back into uncharted territory in the case we're there in gold, but in the case of silver, new charted territory that we haven't seen since the middle of 2011 when silver, hit $50. You can see what a day it's been just watching these markets. And so the exciting thing is that when silver breaks above these recent tops between 30 and 32 and goes back into not uncharted territory, but territory we haven't seen in decades,
Right.
there's really tremendous upside momentum because as a market technician, really what we do is we compare history to current pricing. And so in the case of gold, there is no historical reference. In the case of silver, there's going to be, unless it surpasses 50. And if and when it does surpass 50, my God, there's going to be a lot of exciting silver enthusiasts, including myself. And we haven't had that opportunity for a while. And so the reason that I am so optimistic and so enthusiastic today is I believe that if what I'm looking at, which is silver breaking above $34, the recent tops being $33, we go into an area that we haven't seen in decades. I can't say uncharted, but the younger viewers never saw silver at $50.
That's
They
right.
never sold it nor bought it at 50 because that happened what? Almost 15, 20 years ago in
Yeah.
the middle of 2011. And so it's an exciting time to say the least.
Silver is an attractive investment, especially given its historical price surges and the current market conditions. As gold prices approach all-time highs and potential interest rate cuts are anticipated, silver's role as a safe haven asset is expected to strengthen. With ongoing global economic uncertainties, investors are likely to increasingly consider both silver and gold as critical strategic assets, positioning them for significant growth in the coming years. What are your thoughts on the future of silver and gold? Share in the comments below. If you found this video helpful, please give it a thumbs up and subscribe for more insights. Don't forget to hit the bell icon to stay updated. Thank you for watching.